You're going to love this week's stats. They really are fabulous. In fact, we're seeing a beginning of a new trend, and it could be a little bit scary, so don't go away. So it's really good to be back once again. I do apologize for all of those who were waiting at the end of last week for this update. I must admit I took a couple of days off, and so I do apologize for the delay in getting this out to you. But I'm sure you're going to love the data that I go through in this week. It really is. It's a lot of information there. So what else has been happening, though? Just before I get stuck into things, what else has been happening in my life and very quickly in areas of domains? Well, number one is that once again, I'm making those great strides forward in a completely new way of monetizing traffic. So I'm really looking forward to that. But not only that, is Masterclass Lessons, MCL.club is going gangbusters. It really is. In fact, doing a lot more development in there, and you'll see some more videos being released, and I'm really gearing myself up to do that series on domain sales, which I think a lot of people have asked me about. Michael, can you do a series on domain sales to help us out with selling domains? But so there's been lots been happening, and but without further ado, I want to get stuck into this week's numbers. So here we go, and there we are. All right then. So this week's numbers have been pretty amazing, as we'll soon see. The first thing is this. Remember when we're looking at this week's numbers, we're looking at this far right hand end of the chart, and you can see it's really beginning to go down here in percentage change in revenue. This is comparing it versus the previous 28 days, the current day. So there is a bit of a decline, and that's something we need to be aware of. So if we compare the normalized RPM versus the RPM, and you can see the normalized RPM, which is in blue just there, you can see there was that great big spike. That was just because of the sample set of domains we had an influx of traffic from a really big domain that did no revenue. So that's what that actually created, that spike. So we can ignore that, but normalized RPM is flat. But the one to look at is the RPM is been in decline, and you can see just down there, it's starting to really taper off, which is, I must admit, I was really surprised by this result because we're heading towards Christmas and we got Black Friday coming up, there's Halloween, there's Thanksgiving, there's all these different Northern Hemisphere, particularly US-centric holidays. And so I was surprised by that. But let's see if it's going to be a trend. EPC and CTR. Now, it's harder to see on this chart what's going on with the EPC and CTRs. That's why I like looking at the 14-day moving average. And you can see here that if you look here, the EPC has really fallen off quite significantly. I know the CTR went up, but the EPC is almost out of sync. When we saw this out of sync point of time back here in July, it's doing something again versus the normal sort of counter-cyclical nature of CTR and EPC. But yeah, so that's interesting. So earnings per click and click-through rate. Yeah, I'm going to be keeping a sharp eye on that, which I normally don't look at this chart very closely, but this time I am across the coming weeks, whether we're hitting a downward shift. So volatility. Now that great big spike here was basically the result of this smaller spike, this downward spike there, which I told you there was in this sample set of domains, we had a flood of non-performing traffic which came through. So it messed up the data on those particular couple of days. But so we can ignore that. But generally speaking, you can still see the other days though, it was trending downwards, which is in a contraction phase for the industry. So what's going on here? And once again, this is comparing versus the baseline at January the 1st, 2020. And you can see it's definitely tapering off from the peak. It definitely is. That's the normalized RPM. So what's going on with the split between Google and direct advertisers? Google and direct advertisers are the direct advertisers are beginning to fight back. You can see they're beginning to trend upwards. Google is beginning to trend downwards. Now, we haven't seen this for a long time. You think about it, the whole of this year has been Google taking over the market once again, and the direct advertisers really losing out. But now we're seeing something which is just changing around. So if you're a direct advertiser there and you're saying, and you're wondering what's going on, then it's because Google's been eating your lunch, or direct advertising network, I mean to say, Google's been eating your lunch, but now it looks like some of the direct advertisers are coming back into the direct advertising networks and offering more of the traffic. And you can see this here. They've been the direct advertising networks have been actually winning more of the traffic than Google over time, like they're increasing more, not total volume. So that's an interesting fact as well. Okay, so this is the chart that I absolutely love. I really do love this chart because it shows what's going on with Google and direct advertising from a normalized RPM. And you can see this Google separated out here, and it is beginning to wane. It really is. Now, we've had a great run up until now. It's falling back a little bit. I'll be interested to see whether it becomes a sustained trend with next week's data. But look what's happened down here. The direct advertisers are fighting back. Now, once again, I always like this one is using the same scale. I put them on the right-hand scale so it's easier for us to compare just here. So I know it says direct advertisers, normalized RPM. It's actually both Google in blue and direct advertisers there, normalized RPM. So take a look at those there, and you can see that the direct advertisers are fighting back. So those networks are really beginning to pay more for the traffic. So if you don't have that in your mix for your domains, then you're going to be losing out. Okay, so it's a long way from back here where they're paying enormously more, but it makes me wonder whether some of those, as economies begin to open up, whether you'll start to see things like the traditional sort of direct advertisers are people like the loans and the travel and so forth like that are going to come back into the mix. Okay, so this is just a straight line trend. Is it going up or is it going down? Remember my MBA, the strategic management lecturer said, all he cares about in this class is the trend line going up or is it going down? That's what this is. Over the last 14 days, what's going on? And red is direct advertisers. They're going up. Blue is Google. Over the last 14 days, it's now going down. So that's a bit of a changeover compared to the previous week. That's the weeks, I'll tell you, where we've seen it the completely other way around. So next week's going to be very interesting. Now, this is the percentage change in volatility, and you see the direct advertisers here are swinging around. Google's falling back once again, and it's also reflected in measured from that baseline position on January the 1st, 2020. Yeah, so it's what a run that's been. Is it coming off? I think we'll know across the next couple of weeks. Is this beginning to swing around once again, the normalized RPM as a percentage? Are they beginning to fight back those direct advertising networks? It's going to be really interesting. Yeah, so don't forget, I'm actually one of the founders of ParkLogic. Like, if you're sitting there thinking, gee, I've really been enjoying these updates and stats week after week after week, and you're sitting there saying, I'm not seeing the same sort of thing you're talking about, Michael. Hey, if you're doing more than $250 a month in revenue for your domains, give us a call, reach out. Like, seriously, you're looking at our data? Why not reach out and say, can you do the same thing for me and improve my results? That's the first thing. The second thing is this, like, we always focus on big data, algorithmic switching, managed services and things like that at ParkLogic. But it's also my blog. Like, if you're looking at this on YouTube or even Namepros for that matter, go to my blog, michaelgilmore.com, and you'll find there's so much more information there. I've been blogging for over a decade, so there's a lot of articles. And also, mcl.club, I mentioned it earlier, Go there. If you're thinking, gee, I know everything about traffic, I think you may be surprised and find out that you actually don't. There's a lot of information in mcl.club. And particularly, I think the first few lessons really give the basis and grounding. Like I had a person recently ask me, oh, there's all these terminologies, EPC, CTR, normalized RPM, and all that sort of stuff. It actually knocks those out in the first few lessons. And then it begins to get deeper and deeper and deeper. Like how do you compare a spot price versus an average price and all that sort of stuff to get the maximum revenue from your traffic? What's the difference between algorithmic switching versus just rotating? There's a big difference. There really is a big difference. And I plan on adding another one probably later on this week, another lesson. I'm really wanting to unpack traffic types and how to maximize the returns from your portfolio. But those are some of the things I'm going to be looking at. But anyway, so don't forget those. I look forward to your comments, and don't forget to like or even share this video if you find it's been useful. But anyway, thanks a lot for that. Have a great week. Bye. I hope you enjoyed that video and you find them really valuable for your business and helping you make better decisions. Don't forget to like, subscribe, or pass the video on to your friends. Anyway, thanks a lot for that. Have a great day. Bye.